This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Welcome back onto the Research Talks podcast here with Alan Green. So today we're going to cover Oxford Cannabinoid Technologies, OCTP, and China Nonferrous. So I know we talked about China Nonferrous Gold before, but we'll get a bit of an update on where they are. And of course, OCTP, who seem to be making some decent strides recently in some of their trials and programs that they're working on.
They certainly are, and I think very ably led by Clarissa Showamima-Coker, who, of course, recently was promoted onto the board of the company. She started in January. Clarissa's got quite a CV to her name. She's a trained solicitor, of course, trained with Pennington's. Also worked for other law firms, but she's worked with clients such as Hutchison, Virgin Media. She's also done work as a management coach too. So very highly qualified coming into this role, and obviously she saw some real potential with OCTP at the outset. And of course, Oxford Cannabinoid Technologies is a pharma company that is developing prescription cannabinoid medicines and is expanding its research into several different fields, which I'll come to shortly. But they have a very good website, and there's some very good tables on the website and pages that very clearly illustrate the asset base that the company has. So they've been working on developing these cannabinoid medicines since 2017, based around a fast-track drug development strategy. And of course, the fast-track strategy potentially lowers development risks and costs, and it shortens the time frame to commercialization without compromising on safety and efficacy testing, which of course they're in the middle of with several drugs at the moment. So cannabinoids are produced by, or cannabinoid receptors rather, are produced by plants, mammals, and human beings. Plants produce phytocannabinoids or PCBs, and humans and mammals produce endocannabinoids. The receptors are found in the brain and the nervous system, and these, of course, modulate pain, memory, behavior, and so on. The company, in their mission statements, say that the cannabinoid approach is a safe, efficacious, and non-addictive alternative to opioids. And of course, we know, particularly in the States, that many millions of people are hooked on opioids. And the advantage of cannabinoids, of course, is that they're non-addictive, and that's very important. But of course, the company product range is targeting an enormous market. It's estimated that the size, for example, for the migraine market is worth $6.5 billion. Muscular skeletal pain is worth nearly $3 billion. Lower back pain, a huge marketplace, $7.5 billion. So combined, the pain market is worth literally telephone numbers every single year. So as the company has evolved, it evolved originally before Clarissa came on the scene under CEO John Lucas, and of course Julie Pomeroy is the non-exec chairman. She's also non-exec at Dillistone PLC, Biofutures, Carter & Carter, Western Medical Centre, and also Nottinghamshire University Hospital and NHS Trust. So, the team are very much integral and part of the medical development process, and also key. They're key people within the infrastructure of the NHS and hospital network throughout the UK. So Oxford Cannabinoid Technologies have primarily 4 programs. Program 1, OCT 461201, has been developed as a CB2 receptor for visceral and neuropathic pain. And this is it's furthest down the road, if you like, in developmental terms. It's actually now at phase 1, and I'll come to that. I'll come to that development shortly. Program 2, OCT 13401, is developing phytocannabinoids for trigeminal neuralgia. Of course, that's the flashing head pain, which is awful for sufferers. I know a member of my family suffers from that. Program 3 is cannabinoid derivatives again, and it's further sort of PCBs or phytocannabinoids being developed for neuralgias. And then program 4, cannabinoid derivatives for undisclosed targets for pain, including neurology and also oncology as well. So the company have worked across the year to develop these assets. In July last year, they were forging partnerships with other key players within the biotech industry. These included Aptuit Verona, Oxford Stemtech, Dalriada Drug Discovery, Canopy Growth Corporation, Charles Rivers Labs, and so on. Then in January this year, the trials for OCT 130-401 were reviewed by the Welsh Research Ethics Committee, and the company announced that its lead program, OCT 461201, was on track and budget. So good progress here. And then, of course, in May, we had the announcement that the MHRA, that's the Medicines Healthcare Regulatory Agency, had approved a phase 1 trial with healthy volunteers to assess the safety and tolerability of program 1, and also the understanding of the pharmacokinetic profile. And indeed, in July, the company announced that it had indeed administered the first dose for this clinical trial to healthy volunteers. This was undertaken by a company called Simbec Research. That process is underway now, and the results for this are expected in Q3. So, you know, we're getting very close to those results, which should be, I think, a benchmark day for the company in terms of its evolution. Meanwhile, as the trials have progressed, the company also has grown as well. In June, the company announced Dr. Tim Korn as Chief Medical Officer. Dr. Korn is also Chief Medical Officer at a company called Nadenza Incorporated. He's advisor to Convo Therapeutics and non-exec director at Physiomics PLC, and of course, these are all companies with which OCTP have a close working relationship with. Clarissa said at the time that, of course, Dr. Korn brings to the table huge experience of the regulatory environment, and also, of course, his other work with these companies. There are very key crossovers and very firm key relationships already in place. Also, in July this year, the company announced a development on program 4. That's the cannabinoid derivative that's being used to target neurology, pain, and also oncology. And this is really very much a key step for this asset. The company said the in vitro and in vivo behavior of the drug demonstrates potential expansion into the oncology sector, making it a very viable and efficacious alternative to the expensive treatments that or commercial treatments that are already available in that sector. So it's very much with a biotech company developing a series of programs like this. It's very much a step-by-step series of developments. Also important to note as well that in addition to those 4 key programs that the company is developing, the company has a library of something like 500 further cannabinoid compounds. So as each of the lead programs gets to or achieves phase 1, phase 2, phase 3 clinical trials, it has a huge arsenal of additional cannabinoid models that it can continue to develop in addition to the core products. So very much a key at a key phase in its evolution. In terms of the share price performance, the company has enjoyed a fairly strong year in terms of its evolution. We're looking Clarissa actually released a video recently where she discussed the progress of the company through the year, and indeed with shares currently trading at 1.22p. If we look at the development of the share price performance over the past year, we'll see that we've already hit highs so far of 1.6p, lows of 0.4p, and of course having hit those lows back in July on the news that came out for program 4, and also the news of program 1 entering its phase 1 clinical trial. We've seen the share price push higher since that point. So it's highly likely, I believe, that once we have this news from the phase 1 program at the end of Q3, the developments from that should really lay the foundations, I think, for the company to progress further. And also, it's always worth remembering with OCTP that we have this arsenal of additional cannabinoid medicines that it can tap into in order to bring these to the fore once the key assets have come to fruition. So the company's at a very exciting phase of evolution, and an awful lot of news to come in the coming weeks.
It definitely is an exciting phase. I mean, this is where it all all the fruits of the labour, so to speak, start to show, hopefully. Not without risk, of course, but to get to the point where you're doing the trials, you can really get to see how things are performing. And I think we'll know quite quick from talking to both Clarissa and Valentino that they'll actually get anecdotal, let's say, evidence that how things are going at an early stage, particularly with that trial that's just started. Yep. So there's certainly a very exciting juncture, and definitely one to watch as they advance down that pharmaceutical trial route.
It's like, it's that with any company like this, we talk about mining exploration companies which bring a project to market. You've got the sampling process, then the chips, then exploratory drilling, and then we understand the progress and the process that the exploration company has to go through. It's exactly the same with a biotech company. You have to go through the trials. You have to get approval for the trials in the first instance, present the medical evidence to the authorities. Then you progress the trials. Obviously, you've got the trials have to be overseen and conducted in a very controlled environment. Go to the phase 1, phase 2, and phase 3. And what normally happens is if there is success at phase 2, so we're getting into the late stage, then often the interest of the larger pharmaceutical companies is piqued, and as we've seen with other companies, those assets then turn into very valuable assets, and a company will come in and partner with you to develop the asset and maybe to provide a route to market too, because of course a lot of the larger pharmaceutical companies have the distribution networks in place, and it's almost a plug and play solution. So that's why I think OCTP is at that exciting pivotal phase, when I'm sure the results from this will be closely watched by some of the bigger companies out there, and of course could prove to be a tipping point for valuation.
Excellent. Well, thank you for that, Alan. So let's move on to China Nonferrous gold?
China Nonferrous gold, and some may sort of say, well, this is a bit of a strange choice, perhaps for a research talk special, but I think it warrants closer examination on a number of levels. So the company is currently trading at 1.4p. It has a valuation of 5.3 million, we've seen a steady reduction in the valuation of the company over the past year. And of course, shares have previously been a lot higher. Go back to 2019, shares trading at 18p. And since that time, not a great deal has happened, other than, of course, we've had the impact on the mining stocks around the globe in terms of valuation. It's been the companies, I think, that are close to making discoveries and have demonstrated solid progress. Some of the developments are reflected in the share price. Others simply aren't. And I think a lot of people have ignored China Nonferrous gold because it's seemingly inaccessible. The company isn't that high profile in terms of its discussions and its communications with investors. Nonetheless, the company is the 100% owner of the Pakrat gold mining license and the gold mine in Tajikistan. It's got a license there that's valid to November 2030, and there's a further 6 years left in that current mine life. Now, this is a producing gold mine, so as opposed to doing the exploration, finding what they hope is going to be, is located in the mountains in Tajikistan. It's subject to some degree to the vagaries of the weather, the extreme weathers up there. And in a half-year report last year, the company announced it had extracted 302,590 tons of ore, processed at 2.3 grams per ton, so 16,330 ounces of gold ingots were poured from that production. So the company said at that point it was confident in achieving its internal production target of 700,000 tons of ore over the year. February, that all stopped. Snow stopped production. There were avalanches, which also impacted on the power supply to the mine, so the mine couldn't be worked. So there's a whole month that was basically taken out. In March, the electrical power supply was re-established, production at the mine was restarted, and smelting was resumed in April. And of course, the reason the smelting could only be resumed in April was because the avalanche damaged the road. There were road repairs, but the company said at that point it fully expected to recover annual gold production to last year's levels. Now, Pakrat is situated within, or upon rather, the Tian Shan gold belt, and this is a huge gold belt. It's a huge geological anomaly that extends from Uzbekistan, Tajikistan, Kyrgyzstan, and into Western China, and is host to many multi-million ounce gold deposits. So it's a very lucrative area in terms of production. In April this year, an independent technical report from SRK, and those who follow mining companies will be well familiar with SRK in terms of their status as mining research analysts and assessors. The technical report actually downgraded the existing Pakrat status to a 6.7 million ton average grade, an average grade of 2.1 grams per ton. So with a further 440,000 ounces of gold remaining. So with 172,000 ounces of gold already being mined, the SRK report envisages a further 6 years of mine life, producing something like 43,000 tons of gold per annum. The company also announced final results in June and July. it announced that it had generated revenues of $68,524,835 in gold in gold production and sales. That's as opposed to 71,000 last year. So not too much of a dent considering the fact that the mine was shut down in February. However, and this is really where the current valuation is reflected. The company owes somewhere in the region of 287 million, or they recorded a loss of 287 million, and it has debt facilities with two companies, CNMC Trade and CNMC International, which are wholly owned subsidiaries of China Nonferrous Gold, to the tune of 316 million. Now, the same directors of CNMC Trade and CNMC International are also directors on the board of China Nonferrous Gold. So if you're following me so far, then you can see why perhaps the obscure structure has put some people off from investing into the company. So the company also announced with its results that the terms of the loan were extended to the end of 2023, early 2024, and it had lowered the interest rate it was charging on that loan from 3.25% over a 3-month LIBOR rate to 0.9%, which is obviously far better for the company, and it gives the company time to recover and to speed up production. The company also said that it was focused on perfecting and improving the smelting process and fine-tuning the production process, so costs were cut further still. It also is seeking further regional acquisitions. So I think I believe that with the structure here, and this is a structure, I should say, that has been fully approved by the broker WH Ireland. So they've taken the structure, the ownership, the debt package through WH Ireland, who are fully satisfied with the structure of the company as pertains to a UK listed entity, and they also are satisfied with the fact that it's the ownership and the debt is a related party transaction. So that also is key in my thinking too. Now, I believe that even if we get to the end of this year and the company is unable to fully repay that debt, which on the basis of what it's earning at the moment, it doesn't look as though it will be able to. I believe that because the directors of China Nonferrous Gold, also being the directors of CNMC Trade and CNMC International, will extend the loan further again, or they will create a vehicle to make further acquisitions in the region. Remembering, as I said, this is the Tian Shan Gold Belt. So it's there is risk, of course, but I think the structure as it stands, I think it would be highly unlikely, given also that this is a company that's been listed in the UK for many years. I think it's highly unlikely that the two companies will pull the plug on China Nonferrous Gold. I think it will be restructured, but I also think the vehicle as it stands, if they were able to add some further projects alongside Packard as well, then you could have you could have a very solid mining business that's A, producing, B, perhaps developing some earlier phase assets, or perhaps even purchasing another producing mine altogether. So I'm interested to see what the future brings, and I think you look at that turnover, $68 million with the debt. They've got total debt facility of 316 million. They recorded a loss of 287 million, and the company is valued at 5.36 million on the London market. So there's a massive discrepancy there. I think at some point that discrepancy will be adjusted, and I think there will be an adjustment in the market to reflect that. But I think the issues with the ownership have been signed off by WH Ireland. They're happy that the status of CNG as a UK listed company with that debt structure, it's met all the necessary checks and balances. And I think as a speculative punt, I think CNG could actually deliver quite handsomely in the future.
So you think that perhaps, Alan, the discrepancy there is the risk with the loan? Is that the main point?
Absolutely.
Yeah.
That's it. You've got a company that's turning over $68 million or making $68 million in sales. Yes, it's recording a big loss. Yes, it has the debt. But at the same time, recording that loss, obviously, it's creating employment in the region. There are many sort of many people employed there working on the mine. So you've got a producing mine. You've got this ownership structure, and I think it's going to be a precursor to creating a much larger entity, because of course those losses will also create tax losses as well. So it may well be that with some skillful financial engineering, we could see other projects come into the mix.
Okay, and the loss is loss making because they need to get production up. I think you mentioned, was it 700,000 tons of ore?
Yeah, that's right. Well, it's loss making because it's carrying these loans. So
it's the loans, so it's the big payments on the loans. Yeah, okay.
That's right. Yeah. So it's that's really weighing on the share price. So, but I think if these loans were owed to other entities that were unconnected to the company, then it would be riskier still. But the fact is, the two companies that it owes the money to are run by the same directors who are running CNG. So
you're thinking a debt restructuring is perhaps on the cards?
I think well, there's already been a debt restructuring with the full year results. So they reduced the interest rate they're paying from 3.25% over 3 months LIBOR down to 0.93%. So they're paying less on the repayments now. And I think there's a potential restructuring on the cards, but also its stated intention to seek further regional acquisitions. Okay. I think is very telling. So I think there's potential here for the company to evolve and become a much bigger vehicle, because with that sort of turnover, yes, you've got that debt, but the company is still turning over. It's still got the visibility going forward of being able to continue to produce. It's refining and streamlining its production facilities. So I think there is scope here, and a 5.3 million market cap simply doesn't reflect the fact that this is a huge gold mine. It's producing and it's creating $68 million of turnover every year.
Okay, excellent. Well, thank you for that, Alan. So we've covered the Oxford Cannabinoid Technologies and China Non-Ferrous Gold. Thank you very much for your time.
Thank you, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.